Hello, welcome to CDH's YouTube channel. My name is Ko Fujimoto. I'm going to talk about 3 tax benefits for non-Japanese moving to Japan. First, my qualification. I gotta tell you that I am a US CPA, but I'm not a Japanese registered licensed tax accountant. So I don't have a license for the Japanese taxes. So this video is based on my study as a non-licensed person. But I'm sure you're very interested in knowing the benefits. So let me get started. No tax on foreign source income. You are a foreigner living in Japan, but you have assets such as real estate, investment, 401k, and so forth. If you happen to be Eijusha, translated to non-permanent resident, then you get a benefit. First, you don't have a Japanese citizenship. And number 2, you live in Japan less than 5 years of the residency for the last 10 years. To make it very simple, you live in Japan less than 5 years. Right? Including your other stays, let's say 8 years ago or so. But you get the point. You get the point. Less than 5 years of residency for the last 10 years. If you happen to be in this category, there is no income tax on the non-Japanese source income. In other words, foreign source income. As long as you don't get paid in Japan, you don't bring in to Japan. One caution is if you use the foreign-based credit card, the Japanese government will consider it as paid in Japan or bringing in to Japan. So be careful. Now, this is a benefit because if you are a Japanese citizen and becoming a resident of Japan, as soon as they become a tax resident of Japan by setting up a residency, then the income, worldwide income, will be taxed by the Japanese government. So there is a big break, tax break for foreigners. Number 2 benefits would be segregated or separated into 2 sections here. Foreign assets reporting and moving out from Japan tax. In other words, the Japanese version of exit tax. Same situation. If you have a foreign assets, at the end of the year, over 50 million yen overseas, then you must report. A normal tax resident must report these foreign assets. It's similar to FBAR, but FBAR only deals with foreign financial asset. The Japanese version of foreign asset reporting include real estate and other assets. 50 million yen is very low, as you can see. Using today's exchange rate, it's only $355,000. Number 2, if you decide to eliminate your tax residency of Japan, in other words, you decide to move up, coming back to the US or going back to Taiwan or China, the tax on the unrealized gain on securities and certain assets, it's a derivative type of assets in general. So you have, let's say you have over 100 million yen worldwide, including assets in Japan, including assets or other parts of the world. It's only $710,000. Then the Japanese government will tax you on the unrealized portion of your assets, specified assets in this tax scheme. However, same category. If you happen to be非永住者, you live in Japan less than 5 years out of 10 years, then you're exempt from foreign assets reporting and tax on exiting the Japanese residency. Okay, so far so good. I put each slide, I put the website address where you can dig into more. You may need to use the help of internet-based translator. I think most of the citation or the sites are in Japanese. The last, and I think most significant benefit is in inheritance and gift tax. The Japanese inheritance and gift tax, two characteristics. One is the rates are very high. Two, exemption is extremely low. If I may, I will just speak a little bit about the U.S. side. U.S. side, 2023, the exemption amount is $12.92 million, right? This was the creation of Trump administration in the 2017 Tax Act, and it's sunset. It's scheduled to sunset in 2025, but still, it's 12.92 million per person is huge, and unlimited marital deduction. There is no limit if the recipient is a U.S. citizen. There is no taxes on the gifting from the spouse or the estate. So let me get back to the benefit here. So the Japanese gift tax and Japanese inheritance tax, not the estate tax, Japanese inheritance and Japanese gift tax are ominous. But there is a benefit based on the status of your residence. It's a legal designation. In a sense, it's similar to we call a visa or permanent residency. They use the term status of residence. And these two sites in the green section, one is the English translation of their table. The other one is a Japanese table. Well, I think you need to take a look at both to understand what I mean. Anyway, if you happen to be a permanent resident, this status of residence, or you are ex-Japanese citizen, before you were a Japanese citizen, or if you are spouse of a Japanese citizen, you are in table 2. So they use the term beppyo. Beppyo translated as a different table. But you probably need to remember beppyo. Beppyo number 2. If you are in this beppyo number 2 category, inheritance and gift tax, you get taxed on the worldwide asset in general. Okay? But if you are in a different category, I picked some of them. Diplomat, public, professor, art, religion, business manager, highly skilled professional, medical, research, educate, so on. So if you are in this category, you only get taxed on the assets in Japan. Now, I give you a caution. This Japanese gift and inheritance tax scheme are very, very complicated. And don't take this as a tax advice. This is not a tax advice. This is a little bit of educational material to give you a certain idea, but not the tax advice. I recommend you to consult with the especially international tax burst tax accountant, in particular gift and inheritance tax. It's because of the complexity of the rules. I gotta recommend you to do that. So anyway, this is the third benefits for foreigners moving to Japan. I think I'm sure you have many questions, but I think you get the point. You get the point. You get the starting point of, okay, let me study more type of, the starting point. So this is our disclaimer of YouTube video. It's important. At the same time, this is our last or ending page. CDH can refer you to international tax accountants in Japan who are versed in the international aspect of Japanese taxes, because we are not the Japanese tax accountant, we are US tax accountant, but CDH also can prepare your US income tax returns. If you happen to be a US citizen, I'm sure a lot of US citizens are watching my video. That's why I put the US income tax returns. Once you move to Japan, your tax return would get complicated. And because of the foreign tax aspects, foreign tax credits, the foreign earned income exclusions, and so forth. So we can prepare your US income tax returns because we are well versed on the international aspect of the US individual income tax returns. That's all. Thanks for watching, and see you at other time. Take care.